Hey everybody out there in YouTube land, it's Kemosabe here, giving you a little update on a video that I was contemplating doing yesterday, but we have some price action that I think we can make some sense of what's going on here. Initially this leg down, kind of matching it with this, because I'm looking at how this went up. It went up just like this in reverse. So now we have a trade set up potentially matching that yellow leg with the current leg, and then we want to see it push higher, essentially just mimicking this little ABC down here, potentially come from this area and reach up here and consolidate and then push higher, maybe touching the all-time high, maybe breaking it by a few dollars, something like that. So let's get into the measurements and we'll see what it looks like as far as trade setups are concerned. So to measure it, I'm taking a trend-based fib extension, and I want to measure this leg up and match it with the current leg. Let's see how close they come. I'm going to measure these on the closing price, not taking into account any wicks, and we'll see. Yeah, we're right into the zone there between the 1-to-1 and the 1-272. That tells me that those legs match pretty well. So then I want to match the downward leg that we had back in September. So I'll match the closing price down to the closing price, project from this high, and I'm measuring that leg down. And where did we come to? Right to the 1. So anywhere in this pocket would be the buy setup. Invalidation is the 1618. So I would look for an uptrend to start from this area on a lower time frame, like a 15-minute, 1 hour, 1 hour time frame. I would take initial profits right here because that is an order block, and I would mark the order block right there. That's actually a really good order block. That's a sell setup, so I'd expect some kind of reaction there at 68,341. If you do want to sell this, stop loss goes at the high. You can also put it at the high of the body of this daily candle, or slightly above it, maybe inside this wick at 69,200. And you can sell 68,341 and target lower liquidity. We did sweep the liquidity down there, so I'm not sure how much more you can get, but we can zoom into lower time frames to see what we can get from that. Some low-hanging fruit here is where this wick did not meet the previous wicks here, so that does make for a fair value gap in Inner Circle Traders method. So I'll mark that off from there down to the wick and move it over. So this becomes my fair value gap. You would expect that to be filled eventually. So if this price is going to mimic getting up there, then perhaps this price action comes back down to fill that gap. So let's take the ultimate target there. I was to measure on closures from here to here and project from this candle close low. That gets me a target range of 72 to 75K. So let's mark that off as the target zone. And if that's my target zone to complete this leg up, and we're expecting that to come down thereafter just to complete price action for maybe some kind of ABC this way before breaking up, grabbing liquidity. Let's see what it would look like with a bars pattern. So I'll measure that leg down, and we'll just copy it. We'll move it over to here when we expect to get up in this range. And that would give us our cycles at the same time. If we were to take the cyclic lines tool to just line up when the cycles end up hitting the lows and mid cycles, every 30 days we tend to have a low. So maybe early November we get this gap fill down here at 64,000 area. And that does make sense from a liquidity standpoint to get the cycle low to come back down and fill that. You have to think there's a lot of orders up here, and they're all stop losses and breakout traders. So that's a lot of long exposure coming out and a decrease in sell setups. So once the sell stops are hit, once the stop losses are hit, those turn to instant market buys. So they're buying at market, and then you have the breakout traders. That is a lot for the liquidity providers and the market makers to take that type of exposure, because they have to take the opposite side of that trade. So they take all that liquidity and they push it down to balance out the books and to get on the right side of the market if they do want to take it up. So something to consider: once you break that all-time high, you're likely to have a push down, clearing out those orders and pushing them somewhere else. So we'll just get rid of this measurement and measure this leg from closure to closure, projected from basically all-time high. That 1-to-1 fib extension gets you down to 63,137, giving you the higher highs and higher lows throughout this whole range. And then maybe all you get is this final leg up. But I suspect that we may have started our impulse from this one, but this one might complete thereafter, just coming up here to grab 78 or so. So that'll be a double tap of liquidity, and you're going to be building a lot of liquidity down here. So that's something to be mindful of. Why you have to keep your stop losses tight, basically. So let's draw this out. Currently looking for this leg to do this, to mimic that pattern. Stop loss being around 65,000. Then this leg repeats down here, and then your stop loss is going to be, as soon as you make a lower low close on like a 4-hour, your stop loss could be up there because you're grabbing a lot of liquidity. Definitely a take profit area, because you're pushing up there into resistance and liquidity. So take some profits there, and potentially you get to reload at the next cycle low around 63K. And what comes after might end up just being this little horseshoe and push, like a horseshoe and push. And that would complete this pattern potentially. That could be the market top if we're topping in December. Something happens around the election or something like that, because you're going to have elections right here in the US. If people are trying to play that, then maybe you get some good news, and then who knows what happens, because you're going to have all this liquidity down here after taking all the liquidity up here. So once you start making higher highs and higher lows, your stop losses need to be, you need to be raising up your stop losses. Because if this breaks back down, it could be carnage for 2025. So getting down to the 4-hour chart here, we've had a series of higher highs and higher lows up here until right here. There's your lower low close. So from this close to here, that does give this, well, it does look like a valid sell setup here, that daily order block that I marked off. So you do have a potential for a downtrend. As soon as the 4-hour closes up here, that's no longer valid, and you've got higher highs. You try to buy the higher low. There's definitely a bounce to be played here, because you did take out this local liquidity and you took out these liquidities. You stopped those out. You break below the current low, you should be targeting at least this wick down here at 65, which was my stop loss for the trade setup to push to all-time highs. So maybe you get stopped out, but the closures are still fine. This, if you measure from here to here with a fib retracement tool, this hit the 382. The 0.5 is a little bit lower. I think it was 65,600 would also be an area I would be interested to buy. But that would be playing Elliott wave theory with a 1, 2, 3. Your wave 4 would retrace 50% of the wave 3 and look for a wave 5 push up. Your invalidation as per Elliott wave is crossing into wave 1 territory. So size your position appropriately and manage that risk if you are going to play it like an Elliott wave. And if you are looking for the sell setup here, thinking the high of the week is in, then your stop loss needs to be probably at the 4-hour closing high price. And I would look to sell the daily open, or the daily order block, sorry, because you do have a potential for a lower low, lower high. So then maybe you get an ABC down to that wave 4 target before pushing up later on in the week. Like I was saying in yesterday's video, the bulls were getting pretty loud here, getting kind of toxic. They're all pretty quiet now. They're not as toxic. They're still fairly confident, so I'd like to see this pop up and maybe pop back down below the daily open. As soon as you get back above the daily open, you take it up. If that does end up happening for Tuesday's price action, my current position is the swing failure of that. Stop loss was there, looking to take profits at the daily order block and maybe enter short if I start seeing some reaction there, which I probably will. If this price decides to just come up here and close a 4-hour higher high, I would look for the consolidation to maintain above that and give you a push to all-time high and grab the upper liquidity before that retrace back down to our fair value gap on the daily. Just kind of makes sense. The 2021 all-time high of 64K, or around the 69K, which is the other all-time high of 2021. Price likes to be in this area, so maybe we're looking for that cycle low to happen early November in that range. So I guess those are the trade setups that I'm seeing. That's kind of what I'm interested in. Hope that helps to give context to where the market's pushing and where the liquidity is. Yeah, if you're following along, keep your stops tight. Have a good night.